Hello guys, welcome back to the channel. In today's video, I'm going to be doing yet another update on my Hargreaves Lansdown £10,000 stocks and shares ISA portfolio. Lots have happened in markets since my last one. It's been a little while. Trump sort of laid off the tariff situation, so markets have had a nice little rebound. I'm going to talk you through exactly how my portfolio has performed over the last couple of weeks, break down the different funds that I've got allocated to, and see where we go from there. So for those of you that don't know me, I'm Jack, I'm an investment analyst for a wealth management company, and yeah, this is my portfolio. I'll talk you through exactly what's happened and give some thoughts going forward. But before we do get into the video, I just want to remind everyone that this is not financial advice. This video is for entertainment purposes only. So with that said, we'll get into the video. So here we are on the Portfolio Excel dashboard, and the first thing I draw your attention to is this lovely new chart I've added, which shows the portfolio value as a whole over time. I was hoping that the chart on the left would sort of do that job, but since we started off in losses and the dark blue gain bar isn't below the light blue bar when it should hopefully be above in short order, I've chucked the other chart on the right, and I think that helps provide a sort of line chart visual, so that'll be helpful. But yeah, you can see the portfolio has rebounded since last time quite nicely. It was down in the low 9,000s, and now it's back up towards 10,000, well 10,032, and we're only down 9.62% now, which obviously doesn't look great, but when we jump over to the other charts on the different software, you'll see that I started this portfolio series at possibly the worst time, so not too upset with that. Breaking down the funds that you can see at the top there, you've still got that defensive half and more aggressive half coming into play. So you can see the UK fund there, Fidelity, the Health and Pharma Index, and the Polar Capital Global Insurance at the top, sort of providing that defensive component. And then the other three are the more aggressive, so they're down over 10% each. And again, I mentioned this in my last video, but a lot of this is down to the Trump situation and sort of the distaste or slight move away from US assets. So, you know, with Trump doing what he's doing, the level of trust in the US economy, I guess, in the US financial markets has been slightly eroded, which has led to both the US markets, stock market selling off, particularly small caps, which are why they're down 20.41% since I've invested, and also in the US dollar. So you've got the stocks falling, and then you've got the US dollar, which the stocks are denominated in, falling. So as a UK investor, you're sort of hit with that double whammy, which has not been ideal, but what can you do? He seems to have calmed down slightly recently, which is why we've had this rebound. But even if, let's say, worst case scenario, he doesn't stop being Trump, which seems quite likely anyway, you can wait this out. Like if you're a long-term investor, US smaller companies, you know, buying these innovative small companies in the world's most sort of profit-driven, shareholder-focused economy, I don't think is too bad an idea. Obviously not financial advice, but again, that's why I've got 15.5% allocated to smaller companies, and that allocation won't change too much going forward. On the buys and sell side, there's been no activity, so I get paid in 3 days. Just looking at my calendar there, 3 days, and I'll obviously be investing some of that money when that comes through, but I wasn't able to save anything this month because, as I mentioned in my last video, I've had a couple of unexpected expenses. For those of you that don't know, I was doing the CFA exams over the last couple of years. I found out last week that I passed my CFA level 3, so I am now pretty much free from exams, at least for the foreseeable future, which has taken a toll on the bank account. But going forward, I should be able to invest a decent slug each month, so obviously I'll update you when that happens in May, in a couple of days, and we'll go from there. But yeah, coming back to the portfolio quickly, you can see, as I mentioned, we're up £500, or about 5%, roughly. Obviously it's not that exact amount, but roughly 5% since last time, which is nice. It's nice to see a little rebound, but ultimately, yeah, it's still early days. We're still down over £1,000 on an £11,000 investment, because obviously I contributed £1,100 since the initial £10,000. But yeah, it's hopefully on the road to recovery. Even if not, hopefully the downturn happens in the next few days. Well, it won't because it's the weekend, but buy low, sell high. That's what you're meant to do. So I'll be investing when the paycheck comes through, and hopefully the market continue to rally. So with that said, we'll come on to TrustNet now, which is my website of choice to do charts and stuff like that. and we can look at how the portfolio's fared versus a couple of different sort of benchmarks, if you like. So I'll move over to that now. So here we are on TrustNet, and what I've got set up here is a chart that doesn't make me look too smart, but I think it's useful for context. So we've got my portfolio on there, which is the red line, and then you've got the IA global sector in the blue line, which effectively is all global funds that UK investors can buy. So anyone that's investing in global equities, whether it's passive, whether it's active, I think some ETFs are in there, that goes into the global sector. And you can see that I am currently underperforming the global sector, which isn't ideal, but I think that can happen over the short term. If we put a long-term chart on there, you'd see a very different story. Obviously that's not valid because the portfolio hasn't existed that long, but I have faith that this portfolio will outperform. Anyway, I set up the series at the start of Feb, which is here. So although I am down 10%, it's not just me, it's pretty much everyone that's been invested in global equities that's experienced the recent sort of troubles, let's say. But you can also see that since sort of mid-April sort of thing, we've had a nice little bounce back towards May. So hopefully, well, in some ways I hope it can continue, because obviously that means number go up, but also I'm still building up this portfolio. It's still quite early days, so if the market does pull back or sort of linger around these lower levels for a decent while, then that will mean I get to buy at cheaper and cheaper prices, which is obviously always a good thing. Next thing I wanted to show you was the breakdown by fund, and I'll take the global sector off for a second if I can. And it's just come back on, so I'll just delete it. Sorry guys, 1 second. Here we go. You can see that what we've got here is this. Well, actually that's not true. I was going to say the 3 defensive funds being defensive, but actually the tech fund, C, Henderson Tech Leaders, has come back pretty significantly, and the pharmaceuticals index has sort of not really rebounded at all. You can see in that E line there, which is interesting. I didn't actually know that was going to be the case before I opened this, which I guess is not great, but here we are. Smaller companies I'll touch on first, actually, because that's clearly been having a horrible time. As I said, double whammied by the Trump uncertainty, the lowering of US confidence, both on the business side and consumer side, and then the US dollar sort of cherry on top falling, which as a UK investor has hurt. Pleasingly, on the inverse, A, which is Fidelity Special Situations, which is a UK equity fund, has performed the best. And you can see the drawdown there early on was very minimal compared to the US, which you'd expect from the UK market. But also it shows that maybe the UK market's somewhat coming back. I mean, again, I spoke about this in a different video, but if you go online, all you'll see is people hating on the UK. And to be honest, I think that's quite unwarranted. But it depends on which perspective you take. If you've been invested in the UK over the last 10 years, you probably hate it. But if you're coming in with a fresh pair of eyes, the valuations in the UK are very low. The market is very defensive. You know, you've got big dividends, fairly resilient cash flows, quite a lot of buybacks going on. So that's sort of without getting too technical, that's sort of like a support for the share price. So I think the UK is in a great space, which is why I've obviously got an allocation, and it's performing the best, which is nice. And then you've got Polar Capital there, which is just completely boom. The fact that it's mostly US dollar denominated and it's barely down is pretty incredible. I love that fund. I think it's one of the best funds you can buy, not financial advice. But yeah, overall the portfolio is doing broadly what I expect it to. Obviously I'd rather it go up, given that I'm invested, but equally if it goes down, we get to buy lower. So yeah, that's the portfolio. I'm going to try and do a couple more videos today because I know it's been a little while and my very large, very loyal fan base are probably really disappointed that they haven't been able to watch JM Invest recently. So I'm going to pump out some videos today, and yeah, stay tuned for more videos, and like and subscribe and share with your friends, and find my PayPal and give me money, please. Thank you guys, and see you in the next video.